It takes years and thousands of hours to find a profitable day trading strategy. In this video, I'm going to be showing you guys one of my favorite strategies. It's super simple, and I've made a ton of money trading it. So without further ado, let's get straight into it. For you that don't know me, I'm PB, 16-year-old day trader. I've been trading for almost 4 years now, and I found success at a young age, and I'm blessed to be able to share my knowledge and education and really simplify everything for people. So let's get into it. I hope you guys enjoy this video, and your minds will be shocked. Okay, so first things first. It's so simple. What you want to do is mark your pre-market levels on your chart. You're going to wait for a break of structure, and you're going to play the retest with a tight stop loss, scaling on the way up, scaling at new highs, etc. So mark these things down, and now we're going to go over them in real time, step by step, candle by candle. First things first, we're going to mark our pre-market highs and our pre-market lows. So here's our pre-market high, here's our pre-market low. Second, here we get that pre-market high retest, right? Once we get that pre-market high retest, it indicates to me that, okay, this is a big level. This is an important level. We rejected off of that level, meaning it is going to be a big level if we break over it. This is kind of a double confirmation for us. So what happens? We got a pre-market high reject, and then we get a 5-minute close over pre-market high. Once you get this 5-minute close over pre-market high, that indicates a break of structure for us. With the break of structure, we're going to be looking for 5-minute wicks and 5-minute retests. So what happens? We get a 5-minute retest right here with a nice little wick candle. When you see a candle like this, when you guys see a candle like this, make sure you're studying like this and the things towards the top. This is a very bullish candle because think about it. The buyers controlled the sellers right here, bought it up, and they closed near the highs, meaning the next candle is usually going to be a green candle up. Keep that noted whenever you see that candle. Okay, next, we're going to find the level. We're in calls now, right? We traded off that retest. So this is the entry for calls since we got a pre-market high, 5-minute close over, and then we got that retest. So we're going to find that area of rejection. Right here, we find an area of rejection as we rejected it right here. On the first red candle, we're going to scale out and set stop losses. Okay, so we scaled out. We got stopped in the rest. Now what? We're still above the structure. If a stock is over pre-market high, we are not going to short the stock. We're going to look for opportunities to buy the stock or buy the options for the stock. So what happens here? We get another pre-market high retest, right? This is a pre-market high retest. Pre-market high, we come down to the pre-market high. I am buying calls on this candle right here. On this first green candle off pre-market high, this is a bullish pre-market high retest, especially on that green candle. So taking calls here, and guess where we scale out? I scale out half of the previous high of day, and then the other half with the new high of day. When you see a candle like this is called a gravestone doji candle. So I know it didn't play out in that instance, but I want to show you guys the real and the fake. It doesn't work every time. But when you see a candle like this, after a move up, it could potentially indicate a move down. So this is a big reversal candle. Keep that noted. Okay. Next, you're going to mark your key levels in your charts. If you guys don't have key psychological levels marked in your charts, you're doing it wrong. Meaning you need to have level 400, 405, 407, 410. Find the levels where the wicks match up with each other. Let me show you. I'll show you guys in a little bit. Next, let's take another example. So if you guys should take anything, first, wait for a break over or under pre-market high or pre-market low, right? Then you wait for a retest, buy retest. And then you set your stop loss over your edge. Your edge is your level. And then you scale at new high of days on your contracts. So let me show you guys another example. This is the stock. This is going to be our pre-market high data. This is going to be our pre-market high data. Okay. Boom. Pre-market high. This square is the pre-market high. This is pre-market high. This is pre-market low. Stock goes like this, right? Boom. Boom. What are we doing here in this instance? This is the pre-market low. We are shorting this pop. And we want to see a candle like this. Look. We want to see a candle like this. Shorting this pop. This is going to be our stop loss. The green is going to be our stop loss. Right over the level. We're buying this much risk to potentially make 2x that at least. What's so easy 1 to 2 risk reward? Let's do another example. AMD. We got the AMD pre-market low right here. We got the AMD pre-market high right here. If you guys don't have your pre-market levels marked down by now, I don't know what you're doing. All right, so check this out. We get a 5-minute close under pre-market low, and then we get a wick off pre-market low. Huh. What does that mean? That is a retest of pre-market low. I am shorting this. I'm scaling out here. Why am I scaling out here? Because it's a new low of day. And then scaling the rest out at the next psychological key level. This is 85.90. So what's the next psychological key level? 85. And guess what level we bounced off of? 85. You have to have those psychological levels marked down. Next, this is where it gets really, really, really interesting. Our first scale spot was the previous low of day retest, right? That previous low of day that we sold at is going to become a big level because it was a new low of day. So we're going to put a trend line there at this first low of day, and we're going to trade that retest. And look what happens, right back down, marked up with the previous low of day. So after we're under pre-market low, the next retest spot we're going to look for is that new low of day. You guys might be confused, so let's go deeper into it. Okay, check this out. SPY. We got pre-market high marked, pre-market low marked. What happens? We get this 5-minute candle close under pre-market low, right? 5-minute candle close under pre-market low. And then we get this pre-market low and yesterday's low retest for puts. So not only is this the pre-market low, it's yesterday's low. That means it's huge. Also, it's lined up with VWAP. And if you guys know me, I love trading those VWAP retests. I shorted this candle, actually. Called it out on the Discord and everything. I made a ton on this. So I'm shorting this candle. Who can guess what my stop loss is? Put it in your head right now. I'm buying it so close to VWAP. I'm buying it 30 cents off VWAP. So I'm going to have a little more risk on this one. My stop loss is going to be over VWAP or 5-minute close over this pre-market low. So basically, this is what I'm risking. This is what I'm risking. And this is what I'm trying to win on. I'm risking this much to win basically that much. Easily 1 to 3. Easily. By trading these retests, it's also going to give you a much better average in your contracts because you're buying puts on green candles and calls on red candles. Okay. We get this 5-minute close, right? What are we going to do? We get a new low of day right at the next candle. I'm taking profits. It's a new low of day. We have to take profits. Also, 422 is a big level. And then, guess what happens? We get a VWAP retest under pre-market low. This is an A+ short. If we're under pre-market low and we get a VWAP retest, I love taking that short. Also, if you get a pre-market low and VWAP retest lined up, that's also another A+ short for me. So I take this short, write it down to probably this previous low of day, and take profits on this candle. Why? It's a VWAP retest. It's really, really, key. It really is key. Let's check out how it reacts in some other scenarios. Chop days, it's okay, but okay, here we go. Pre-market high, pre-market low. Our pre-market high is also the day before's high. So let's check it out. What did I tell you guys? If we get a reject off that pre-market high and off that pre-market low, what could happen? And that's what happened. We got this reject off this pre-market high area, and then we get another one right here. But technically, this is a 5-minute close under. But this is a very hard candle to catch because we're kind of chopping around it. So the main play would actually be on this right here. You may ask PB why. This is a pre-market high retest lined up with a VWAP retest. So add the volume weighted average price to your chart, this yellow line. Once you see it above pre-market high and the yellow line is above pre-market high as well or lined up with it and the stock comes down to it, that's where I like to buy calls. I trade this setup every single day. This is my favorite setup for the upside and for the downside. Downside's the same thing, just on that pre-market low. And check it out. Isn't it crazy how the buyers just soak it up right off the pre-market high? Because this pre-market high becomes a big support. Resistance is going to become support, guys. You need to recognize that. And this is a rejection of the previous high day yesterday. That's the day before his high day. You got to have those marked down. You need to. Let's show you guys. So you guys may be asking now. This is kind of the final step. PB, how do I find key levels? You keep talking about key levels. I need to know how to find key levels, which you do. So I'll do a quick little thing on that. So let's recap what we've learned so far. Pre-market high retests equals long. Pre-market low retest equals short. VWAP lined up with it equals A plus. And if you're having trouble finding the pre-market high and pre-market low retest, you need to turn on extended hours on your broker. Okay, so let's look at the SPY daily. It used to take me hours and hours to find these key levels. Now I can do it in probably 30 seconds. I'm going to show you guys how I see it though. Okay, first of all, we're marking lows. We're marking areas we bounced off of. Okay, we got to turn extended hours off for this. We need to be able to see the gaps. Let me show you guys something. This is a gap. This is what a gap is. You always mark the high of a gap and you always mark the low of a gap. See how that's a very big area? And this is that gap. We filled the gap. 9 out of 10 gaps get filled, so always mark those down. Number 2, check this out. Big level we bounced off of, right? Right there. It's the exact level we bounced off of right here. Isn't that crazy? These are just examples of how I find my key levels, like right there. Bottom of flags. This is called a bull flag right here. This is called a bull flag right here because it's consolidation after a move up, consolidation, and it's in a stuck range. So the bottom of a bull flag and the top of a bull flag is always going to be a big level. So we're going to mark those down and mark those key levels down. The top of it's at 430. And then obviously right here is going to be a big level. Look at those rejections. Right here is going to be a big level. Right here is going to be another level. Right there is going to be a level. And if you're in new age, you know the NFP levels. If you guys, you're probably so confused on what NFP is. It's basically a 100% win rate strategy that one of our analysts that he's been trading for like 15 years found for us. I'll make another video on it very, very, very soon. Just if you guys blow this video up, I'll make a video on the 100% win rate strategy. But anyways, that's just how I find my key levels. I look for areas of rejection. I look for areas of support like this, and I mark that down. I mark those zones down. I mark those ranges down, and I use them when I'm trading intraday. That's basically it, though. I mean, let's check out. All right, since we're already on the whole topic, let's see. Pre-market high. Yeah. So if we want to do the 4 a.m. high, it'll be around. Yeah, we can just do that right there. So for today, we didn't get an opportunity, which you're not going to get many opportunities to do it, but that's okay. That is okay. Check out this day before. Pre-market high retests. Pre-market high, reject at open, and then rip 5-minute close over. Once you get this 5-minute close over, that means we're only looking for long setups. Look how many opportunities you have to make money. 1 VWAP retest, 2 VWAP retest, pre-market high retest, this is A+++. We go right back up, pre-market high retest. I actually caught this candle for about 80% because I played it on the way down. And yeah, it's that simple. Over pre-market high, we trade those VWAP retests. Under it, we trade those pre-market low retests and with VWAP. So that is basically it for me, guys. Hope you guys learned something from this video. If you guys want more simple strategies like this, drop this video a like, subscribe, much more coming. Follow me on Instagram, and let me know if you have any comments, questions. I'd love to answer all of them. This is just a start to my YouTube career. I'm going to start posting so much more. Stay tuned. Next video is going to be a banger. Potentially, actually, I'm not going to spoil it. Peace.